Hindalco is a stock that we're talking about at this juncture and because of earnings. And in fact, we have a conversation lined up with Mr. Satish Pai, who's the managing director of the company. Blowout numbers by the company despite weakness in Novelis. Here's what the management had to say.
I think that the upstream EBITDA per ton is good, but as our downstream capacities expand, the new 170 KT Aditya rolling mill is being commissioned this week as we speak. So our downstream volumes are going to jump to 600,000 tons per year from next year. So I think that we are expecting the downstream EBITDA to go above $250 per ton. This 250 is on top of the upstream EBITDA per ton. So I think that starting from next year, you should see a substantial contribution coming from the downstream side of aluminum.
And in terms of the Aditya FRP project, 8,000 crore project cost, are we well within that range, and how much is done till now?
No, the Aditya Alumina project was 8,000 crores. The Aditya rolling plant was about 3,500 crores. So that has been commissioned. The alumina plant, we have now started the construction work, which will be commissioned late FY26.
Got it. And I want to come to the aluminium, upstream and copper segments as well. They did do well this quarter. However, shipments were flat. Any key reason of why this was the case, and what's the outlook going forward?
The shipment is flat because we are running at full capacity. So we have whatever volume we produce, we are shipping. So on the upstream side now, we will have to wait for our alumina and aluminium smelter expansion projects that we are kicking off. And on the copper side as well, we have started the copper smelter expansion project as well. So over the next 3 years, we will be investing about 40,000 crores to do these upstream expansion projects.
And in terms of demand, especially in India, are there any segments or pockets that are seeing better demand? And is there any concern regarding something like an auto segment?
So most of the sectors, electrical sector, packaging, white goods, all these, the demand has been extremely strong. I think in the third quarter, as you said, auto was a little bit weak, but we are expecting to see a bounce back in Q4.
And in terms of pricing, you've seen aluminium and copper pricing clearly benefit the company in Q3. In terms of Q4, aluminium price, future prices up about 2%. So what's the outlook on pricing? You have the China stimulus coming through, but how do you see prices pan out in Q4, especially as well as FY26?
So I think that the aluminium prices for aluminium are currently running around 2,600. And I think that we should see this staying because the supply demand is quite tight. There is a lot of uncertainties with tariffs and sanctions. So I think you're going to see LME prices of aluminium stay at this 2,600 levels for next year as well.
I also want to talk a little bit about Novelis. They have been under pressure because of the higher scrap prices. In terms of Hindalco as a whole, do you expect this kind of weakness to impact the overall margins, or is this being, offsetted by the India business?
So if you see Q3, the India business more than offset the weakness in Novelis. But we have said that Novelis Q4 performance will be a bounce back from the seasonally low Q3 quarter. So volumes come back, pricing is going up. So I think in Q4, you will see Novelis bounce back to the Q2 levels, and the India business should continue to be quite strong in Q4 as well. So Q4 should be a much better quarter for us than compared to Q3.
Got it. And, there's a lot of uncertainty, tariffs on aluminium. I do understand that Novelis is a US-based subsidiary, so it is cushioned. But, could you maybe give the viewer some context about if Hindalco is cushioned from this tariff uncertainty or if there is some exposure?
So see, our analysis of the current situation, as you rightfully said, for Novelis, it's neutral to positive. When you look at the Hindalco India business, we hardly export any metal to the US. Most of our exports go to the Asia side. So at this stage, we do not see a big negative impact on Hindalco, but we'll have to wait and watch. Currently for Novelis, it's a neutral to positive type of an outlook.
I also wanted to get your capex guidance. Last quarter, the $4 to $5 billion over several years on various projects. I wanted to get a better breakdown. FY25, how much has been spent and will be spent, and what's the kind of outlook for FY26 and the allocations, if you may.
Right. So Novelis will be spending roughly about 1.5 to 1.6 billion on the Bay Minette project in FY26. Their capex this year was in Bay Minette about $1.2 billion. If you look at the Hindalco India business, our capex this year will be around 6,000 crores. Next year, it will be more like 8,000 crores as many of our upstream projects start.
And lastly, I want to end it. Net debt has seen an uptick. I do understand that you have a lot of capex plans, but when will this peak at, and how much do we expect it to keep rising every quarter?
So the net debt to EBITDA increase is purely because of Novelis, which is doing the 4 billion Bay Minette project. So we have already guided that the Novelis net debt to EBITDA in FY27, late 26 can reach about 3.5. And then as the project kicks in, the net debt to EBITDA will go down. I think on the India side, it's fair to say that the net debt to EBITDA will never cross 1. So on a console level, you're looking at more like the 2 as a max net debt to EBITDA over next year.
Lastly, I wanted to get your kind of sense. We are already halfway into Q4. What kind of growth can investors expect in terms of FY25 on the financial side? Maybe it's on the top line or the bottom line or even the EBITDA per ton.
Well, I think that FY25 will be a great year for Hindalco. And I think that, we are, as you said, halfway through Q4. So Q4 is looking better than Q3 already.